Everybody. Morning. Morning. Got Don and Will and Hugh and Donald and David and Svenborn, Rob, Dan. Lots of subscribers. Nancy, Ed, Mad, Frank, William, Ivan. Good to see everybody this morning. Good to see you. Good to see you. Dun, 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 dun. FOMC done. Done. Looks like we have B, and we have Diane, Craig, Mark, Ted, Darren, Rongamer, Jason. Buenos dias, senor and senorita y senoritas. How's everybody doing? Everybody survive FOMC? Make it just fine? I mean, we had a 1.1% pullback and then shot right back up. And then, yeah, Jorge. And I don't know. I mean, right back up. Looked like we were going to rip overnight and then pulling it right back down this morning. We'll talk about the charts here in a minute. But first, let's talk about, since we have retail sales in the rear view earlier this week, we have two big retailers out there vying for last mile service. Amazon building out these fulfillment centers like crazy, and Walmart sitting there with stores everywhere already deployed. So welcome back to another episode of the Money Talks and the BS Walks. And, well, let's jump into kind of comparing this. Apparently Goldman Sachs was busy digesting this while everybody else has been screaming with hair on fire about a potential rate cut that just came in line and nothing happened. So here's the story, everybody. Picture this. It's early September. Goldman Sachs, well, they're hosting their fancy 30-second annual global retail conference. And that's the kind of event where people pay money to come and sit, dress up in their $3,000 suit, and discuss how to sell $3 t-shirts to the masses at retail. And Walmart, of course, one of the subjects. Not with some sort of flashy presentation about metaverse. Walmart comes in and presents. But they presented cold, hard numbers that would make even penny-pinching grandmothers proud, maybe. So Goldman, bless their analytical hearts, decided to play journalist and asked Walmart 4 questions. What's your favorite color? No, I mean, how do you feel about supply chain disruptions? And not that one either, actually. So let's discuss what they actually did discuss. Question number 1. Hey, Walmart, how exactly are you planning to not get completely steamrolled by Amazon? Now, they didn't quite phrase it like that, but essentially that's what they asked. And Walmart's response was beautiful. Quite perfect, actually. Almost pure retail poetry. They said, well, funny you should ask. See, we can deliver to 94% of American households in 3 hours or less. 3 hours. That's faster than most of us can decide what to watch on Netflix. And here's the kicker. They're expanding to 95% by the end of the year. Meanwhile, Amazon is trying to figure out how to get their drone delivery package system going without accidentally dropping the bomb on somebody's backyard barbecue. And, well, there was more to it than just that. A quarter of Walmart's fast deliveries, they're already up to 25% of their fast deliveries now happen in 30 minutes or less. That's faster than most pizza deliveries, and probably more reliable than your local Domino's driver that somehow gets lost going to your house, even though he's been there 12 times. And, I mean, GPS can literally guide a rocket, but somehow the Domino's driver can't get the pizza there on time. Anyway, here's where it gets interesting from an investment perspective. When customers start using that fast delivery service, something magical starts happening to Walmart customers. They start buying more stuff. And this is like retail psychology 101. You need some milk, you need some eggs, You need it there by dinner. It's going to be there in 30 minutes or less. And suddenly you think, hey, while I'm getting groceries, maybe I should order a coffee maker. Mine's on the fritz, right? And all of a sudden, you just up the order. And before you know it, Walmart's not just your grocery store, they're your everything store. Question number 2 was about their marketplace strategy. And this is where Walmart showed they're not just playing checkers with Amazon. Amazon's been trying to play chess, but Walmart's actually playing 4D chess while Amazon's still trying to figure out the rules to 4D chess. See, everybody knows Amazon has a massive marketplace where third-party sellers, they hawk everything from genuine leather wallets to genuine leather wallets that are definitely not genuine or leather or maybe even a wallet. But Walmart, they've got something that Amazon doesn't. They're the largest grocer in America. Groceries. They move faster than gossip in a small town. We've all got to eat, right? We're just 9 meals away from chaos. Here's the genius part. Walmart is now putting QR codes on select marketplace items in their physical stores. So when you walk into Walmart, you see something cool, you scan a code, boom, you've all of a sudden got access to their entire online catalog. It's kind of like they've turned every store into a showroom for the internet. And when sellers join Walmart's fulfillment system, guess what? Their sales, those sellers' sales, jump up by 50% on average. 50%. I mean, that's not growth. That's a rocket ship with Walmart logo on the side of it. Now, question number 3 was about consumer trends. And this is where things got maybe a little spicy. See, Walmart's seeing share gains across all income levels. This is share of the market share gains. And here's the plot twist in all of this. The biggest gains are coming from upper income households. That's right. People that can afford to shop anywhere are more and more choosing to shop at Walmart and get delivery. It's kind of like watching the cool kids decide that the nerdy kids actually has the best lunch and then going to buy that lunch too. I don't know. Meanwhile, the middle and lower income consumers are feeling some pressure, especially around items that are hit by tariffs. But here's the beautiful thing about Walmart's strategy. They're playing the long game here. They're doing about 7,400 price rollbacks across the most popular purchased items. 7,400. That's more rollbacks than a yoga instructor might have during their entire career. Anyway, and question number 4, pricing strategy. This is where Walmart shows that they understand economics and the customers better than just about anybody, including Jerome Powell during his speech yesterday, where prices are going up, but labor's weak, so we're going to cut rates because we favor jobs over inflation. Whatever, dude. Whatever. Anyway, they're seeing gradual cost increases due to tariffs, but instead of just shoving that forward to consumers like some kind of retail hot potato, they're value engineering their products, taking out costs, holding prices where possible, pushing the screws to the suppliers, maintaining those price gaps that keep consumers and customers coming back for more and more. Now, how does this matter to your wallets, maybe your investment accounts? Walmart just reported their Q2 numbers a couple weeks ago that would make a CFO weep tears of joy. I mean, revenue was up 4.8% in retail. Operating income up 8.2%. And the beautiful part of all this, their e-commerce had grown 25% globally. 25% in a world where everybody's worried about economic slowdowns right now. Walmart's e-commerce is growing faster than a hungry teenage boy's appetite. Their advertising business up 46%. Their membership income, Walmart Plus, up 15.3%. They're not just selling stuff anymore. They're building an ecosystem. It's kind of like they looked at Amazon's playbook and said, hold my beer, watch this. We're going to go to the heart of America. and show you how to get this done. So the investment opportunity, right? Walmart trading around $100 and change, but analysts have an average price target about 111. Some very optimistic ones calling for 127. I mean, that's a maybe pay attention kind of upside. Maybe like 20%, right? The stock has already climbed from 80 in September 2024 up to 100 plus today, but here's the thing. It's not just a momentum play. This is a company that's figured out how to actually compete with Amazon by not trying to be Amazon, but actually lean on their strengths, their stores that they have close to everybody. They've got the grocery advantage, a huge grocery advantage, the delivery speed, the physical footprint, and now they're building a higher margin business that can make investors happy and maybe do a happy dance. It's kind of like watching David not just beat Goliath, but teach him how to use a slingshot. So there you have it, everybody. While everybody's been obsessing over AI and crypto, Walmart quietly building the moat around their retail empire probably makes Sam Walton proud and maybe make Jeff Bezos nervous. Sometimes the best investment opportunities aren't flashy. Sometimes they're the one that just kind of makes sense. So that's it for the opening segment. We'll jump in, look at how we can actually try to make some money today. Be careful out there. Welcome, everybody. Hey, Goose. Good to see you. General, good to see you, sir. And yeah, Kimberly in the chat. I started buying Walmart, groceries at Walmart. It's a strategic play from Walmart. It's pretty interesting. So Amazon trying to roll out their groceries, but they don't have, they just don't have it. They don't have the infrastructure for groceries. They don't have the footprint to get to 95% of America's population. It's just, I don't know. It's an interesting, you can let me know what you think in the chat, but that's kind of an interesting breakdown from Goldman's trading desk there. Anyway, jumping over, how do we make money today? All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation tended to be informational, maybe educational, maybe fun, maybe some entertainment. Not a recommendation to buy or sell any financial instrument, including stocks, options, bonds, forex, futures, cryptos, despite we might talk about any of those things. And if you desire personal financial advice, you want somebody to tell you what buttons to push to make some money, hire and consult a financial advisor. That's not what I do. Not trying to play one on YouTube. So we made it through FOMC yesterday. If you missed the news, they cut rates as expected. It's kind of in line. Not really much reaction. It's kind of I was protecting myself from chaos just in case. It's always a smart thing to do. Probably close most of those hedges today. Even the trades, hedges. Although if we continue to roll off, maybe keep it open. I don't know. One moment at a time, Unemployment claims came in basically in line. Somebody was asking about Joel's jobs. I don't see that on the calendar today. Basically nothing tomorrow. We've got rolling in next week, last full week of the quarter. We do have OPEX coming up tomorrow. Last one for basically the end of the quarter OPEX. Probably be a big one. Lots of gammon rolling off. Might be able to get some movement in the market. Got some PMI next Tuesday. Nothing next Wednesday. Final GDP. Some core durable goods next Thursday. And PCE coming in on Friday. Yeah. I don't know what's going to move the market. So far, nothing. We're just going to grind it. Grind in place. Grind in place. Yeah. So there was the rip overnight, and we brought it right back down for a flat open, basically, or pretty close to flat open. So we popped just a little bit. New all-time high. How high can this go? Well, at this point, we have the high in place. We have the low in place. And 66.36, 66.46, and 66.72. Those are the most likely upside targets before we do the next little pullback. I do mean little pullback because, I mean, we could ramp this on up to maybe 6,800. We've been doing these little pullbacks on the 30-minute here. Not big. Like I said, yesterday that was about 1% pullback. As long as we hold about 6,500, probably heading up to maybe 6,800. If we start breaking down, you can put alert on your chart right around 6,500. 65 on SPX, on the cash index. If we get below that, something bigger is taking hold here. Could come down to 63, maybe even 62, maybe 61, maybe even 6,000 again. So right now, support right around 65. Alrighty. Yeah, Walmart, Sam's Club. Yeah, I guess I mean, we've shopped at Sam's Club for a long, long time. Anyway, we talked about this one potentially going to hit that 64.4. We're through it, back tested it, moving on up, moving on up, moving on up. But we did stop right there. So next upside targets, this is where things get spicy. I thought we might type out somewhere around this 20, if you go right to the middle of the box, 25.4 or oval target, whatever you want to call it. We are at the bottom of the target, so conditions are ripe for a pullback. Now, there's a few things I'm watching that I thought might have to happen before we actually top out. Number one, oops, removed the wrong fib lines. Number one, RSP might need to top out at a target. It's equal weighted S&P, and right now it's barely budging. Might need to take that to the top. Look at some other market dashboard items. S5TW, well, that's set for a drop. S5FI, that's set for a drop. S5TH, however, still could use a little upside. Same on this one, NDTW. Haven't really bottomed out yet, but we've gone down to the bottom where we can come back up to the top. We got close enough. Close enough here. NDFI also got kind of close enough. We can come back up to the top. So NDTH, stocks above their 200-day on NASDAQ, still needs to hit the top. So we may have recharged stocks above or below their 20-day and above or below their 50-day enough on both indexes to push that higher. Russell, this is interesting. Despite all that bullish momentum yesterday, this one looks like it still needs to come back to the bottom again on the 20-day. Running out of gas. Russell stocks above the 50-day hasn't recharged either. So this index is completely different than S&P and NASDAQ, especially when you look at the number of stocks participating, and it's a much higher number right here. And then Russell on the 200-day looks very similar to NASDAQ and S&P. Move, not really moving lower, looks like. And then lumber still showing warning signs of weakness in the broader economy. It's interesting. This was also interesting, I thought. We've taken a fair-sized step back on the 20-year constant maturity rate. Not really the same, but the 10-year back to the lows we've seen for this year, basically. Can we break down, push the actual interest rates for mortgages lower? DGS 5 actually starting to maybe test the bottom that we've had last year, getting close. And then we look at the DGS 2, and we're sitting there at the lows we've had for the last year. Now this will be interesting because the Fed, Jerome Powell announced that they were going to have the rate here and potentially do 2 more cuts, and they have 2 more meetings this year. So that'd be a cut in October and a cut in December. Cut in October, let's write down, well, right at that line. And then a second cut in December would put us down here. And that's close to where the interest rate is. I don't know if they want to get that close to it. Should be interesting. Let's see what happens. Meanwhile, price to sales. I have to put it on a line chart. Pushed up to a new all-time high this week. 3.35. Holy bananas. Never been higher on price to sales across S&P 500 companies. Average price to sales ratio, 3.35. I did think that maybe we needed to come right up in here before we take a big pullback. So a little bit upside left, potentially. Now, the positive reaction potentially from the market does fit with my expectations for crypto to potentially go higher. Look at Bitcoin overnight. Back to the candles. Still on the path. So we're scratching that wave 3 target. You know, I don't know if this was enough for that 3434 or if we're going to potentially get a bigger 4. Not getting in the weeds at this point. If we run it right on up here, I do expect a little bit of pullback, but it doesn't have to happen. Like it can just rip. You know, AMD kind of proof of that. You know, we can just rip off of a low and not look back. You know, this one just before we started consolidating, so we could do that on Bitcoin. Be careful out there. But upside, you know, if we're gonna play this thing, more global liquidity, let's go, baby. Let's go higher. We've got Ethereum holding on here too. We could pop that thing through. That was a lower high right there that we just did right here. Lower high. We need to break through that one and break through this one from back here in last month in August. Break through both of those and set up the upside. Get through the red zone. Get up in that 6,000 area. That's what I want to see. NKD, look at that candle. Global liquidity. Yep, probably going higher. I kind of warned, you know, we might see this big breakout blow off top thing. Now, I was cautious about if the Fed made a misstep and the market reacted negatively. But everything's in line. Everybody's playing. Everything's going the way we expect. So, potential to run up to the targets. 48, 49, 50, maybe even mid 50s, 54, 55,000 on the Nike. And then what happens? Potential for a giant pullback. Dollar, look at this baby. Look at that thing. I don't know how I could do it any better than that. Right in the target, reversing. We break through this downtrend of highs right there. Probably going up to the roadmap line. Next stop, 100. Everybody talking about the weak dollar, anything but the dollar, and this thing's going to get strong and prove everybody wrong. Heartnet going to be wrong, wrong, wrong. This is looking like the potential to reverse here. And that actually made it a slightly lower low. So that could have been it. We actually tagged a slightly lower low. Crazy. So the Mag 7 stuff, Apple doing Jack Diddley today. Amazon. Still rejecting that area. Google. 263, still the upside target. Meta. 839 upside. If we break back below the, we back tested this breakout level right in here. And we struggled to break through, jumped up, came back, back tested it. Now we're set to ramp it on up. 840. No fear in the market, baby. Let's go higher. Microsoft. So we've got a big resistance at the 618 retrace here. We'll have to get through that. And it could be first move A, B, C. We might see that play out. NVIDIA. I guess we've already forgotten the news that China's banned from buying, Chinese companies banned from buying this. Both, it's kind of funny, you know, ByteDance was banned and AliExpress, or Alibaba, and both banned from buying any GPUs from NVIDIA. Looks like a first move down, a retrace, and a potential for a second move down back in this area. To me, we'll see. That would be the retest and the breakout here. Tesla. Let's go. Continue on up. 460 just above us. 500. Pretty major resistance up there. We rejected actually tagging 500 back here. So big psychological number at 500. I think we've got some resistance coming up at 450 though. See what happens. Netflix. That's the little baby. 1, 2. Watch out for the flush here. 3, 4, 5. Potentially down in here. ASML. Oh man. That's only got 80 more points to the $1,000 target. Now it can top out here at 940. That would be potential A, B, C up right there. Could come up as high as 1100 and still be in that correction and still go down again. This is a warning. Now, if it is strong and it does break on out higher, we do somehow make it up to 1200. That sets the upside continuation potential to maybe going up to like 1600. But right now, I'd be very cautious. And if you got into this down here, when I pointed it out, you're doing pretty good, but I'd be cautious. Betting on that to go even higher. KLAC hitting the target. Next upside, 1200. S&PS. That was a 3-wave up into that and drop. I would expect this to go lower than that low right there. So even if we retrace some, watch out for a reversal back down in this 330, 340, 350 area down there. CRWD. Boy, that roadmap line really sluggish today. Save it. Reload it. Let's see if we can speed this baby up a little bit. Probably not, but we'll see. So CRWD, Look at that beautiful, beautiful roadmap bounce. Right up to the resistance, right back down. Classic. And now we're kicking off another potential entry. This high, this low. With the close above today, sets the odds we're going on up to 354, 550. Possibly, we might, on this attempt, make it up into this target zone around 630. 590 to 670, 630, kind of be in the middle there. Bulls. Boom. Bang, 3x leverage. Be careful. See, let's go look at this one. INTW, next one down. Boom, coming up. Target's up here at 41. App loving. If we can get the extension, we didn't do a pullback, so I don't know. Like that's, I don't know. How high do we go from here? Maybe 963. And we've got some resistance where we are. More resistance coming up at 700, and then 963 above that for app loving from the last big pullback, basically. Just looking at those upside potentials. Didn't do that pullback yet, so watch out. This could top out in here and do a pullback before we can come on higher. And the breakout level would be a potential support there around 520. And we're at 620, so these numbers are getting big as far as app loving moving. Spotify pushing higher. Careful. We can still go lower, but looks like 811 might be where we're heading. Always cautious on these. AMAT has a 1, 2, and set up for flush out. Be careful here. Why would it go down? Doesn't matter why. That's the price pattern setup. Right? The Y comes later. Price pattern. Why was Boeing going to go down? I didn't know, but a door flew off an airplane. GE Veranova looks like we're still potentially heading down. SMH ripping on up, 325. ALAB, next upside, 294. CLS at the target. Be careful. Might need some more pullback before we can go higher. Let's add I started adding this 200% line on here. 366 or 360, right in there. Intel, nice pop. We've got resistance coming up at 33. That's 618. I would like to see it pop on through. ENTB. Nice little pop there. That's potentially a roadmap bounce. So that potentially, I mean, not roadmap. That's measured bounce. Excuse me, measured bounce. That high, that low. This puts the upside potential right up in here. Around 60. Right now we're at 15. This is pharmaceutical though. Be careful. That has the upside potential. Price pattern there. I wouldn't play it because it's pharmaceutical, but biotech pharma tend to stay away from. Oh my gosh, look how close we got. Come on, one more dip. One more dip. One more dip. I would love to see this. It's on my potentially bullish list, but we need to tag that downside. I mean, we got it close. Is close enough? Was that close enough? I don't know. There's no reversal setup, so I'm not jumping into this. Like, it could still be a knife catch. We could still not hold that and still drop further. Could come on down here. Not sold yet. Duolingo also potentially working on a bounce. We're going to have to get through the roadmap line to set up the upside to 600. You could buy now with a stop down here at the lows if you wanted to. About a $30 stop for a potential like 3x, 2x, 2x upside. Maybe even a 3x upside. Fauna. Yeah, we're just grinding in here. That's 3 up. Be careful. 2, 3. That was an initial drop. 3 waves on a retrace. Has potential to do a C down. Just be careful. That's yeah. RGTI. It's Rigetti running on up to 25 potential. At the roadmap line. That might turn down. MSTR. This thing is lagging. If this is a 2x beta on Bitcoin, talk about lagging. This thing's sitting here doing jacks diddly for weeks. Under the roadmap line. This might have a giant catch-up move. I do have exposure to MSTX. I did sell $22 puts last week for this Friday. Potentially buy more and lower my DCA. DCA to lower my cost. And this thing starts ripping. Back up to 100 at this point. I don't think I expect it to go up here anymore. This correction ate a lot of value, and we're just not performing here. So it'd be good if we saw this up, 2, 3, 4x, but not sure I expect it to outperform on the upside. Reddit, probably going on up to 308. AVAV, probably going on up to 306. MDB. So resistance is up here at 471. And another one right there at 365. And downside potential is still in the cards. Like, we're still in a downtrend. Lower highs. That's a lower high. That's a lower high. That's a lower high. Be careful. We can make lower lows. That's a lower. That's a low. That's a lower. Like, be careful. We're not setting up for a breakout yet. I would be very careful on MDB. CEG. First move down, retrace. Watch out for another move down. Has the potential setup to go up to 395, but how much grinding in here does it need before we can pop it? Probably coming up here, just not sure on the time frame. Coinbase still has not hit the roadmap line. I would love to see one pop like that and set up that 475 target. Now, it could just rip from here, but so far it's kind of being like MSTR and just not doing anything. Kind of being like strategy. AVGO potentially topping out here. That was an extension. Would not surprise me one bit to see this come back before we go higher. LRCX. Yeah, we hit the 124 targets. 135 above that. S-Long. Yeah, I talked about this one potentially going up quite a bit. Maybe up into the 140 area up there. Talked about that yesterday. Missed out. TCL. 135. USD. 101. AXP. Has a bigger upside potential to get a bigger move, but we may ping pong our way up there. All right, grinding on the roadmap line. If we can push through, has bigger upside potential to come back to the highs at 450. NVO still working on reversing the bottom here. Still lower highs. That's the lowest low. One move up. Just an ABC retrace to get continuation puts us into the roadmap line here. That can still result in a lower low. Lilly announcing the new diet pill, lose all your weight without having to take shots. Still got a big gap down to break through. Still got a downtrend of highs to break through. Is this finally the miracle that everybody's been waiting on? Or are these pills going to be like the ones from the 90s that ended up killing everybody and they had to ban them? Just be careful. Circle. Still looks like the hype train set for a visit into the basement. LEU. Still lower highs at this point, but if we're going on up, potential up here. 390. I don't know what that line was. It's probably that pullback pulled up there. 297, 380, 520. Those are upside resistances on the way up. STX, look at that. Go. That's a monster move right there. That's going for 263. That's going to be bullish. May pull back and then go again. That's a wave 3, baby. And we're going for 263. I don't know how long it'll take to get there, but we're going for 263. Could extend past it. Adobe would look best with one more dip. Resistance 387, somewhere around 310, 315, 300. I don't know. Downside. Light. Oh, man, look at her go. Oh. I pointed this out bullish a few weeks ago. Anybody got that one? Great work. Great work. I didn't touch it, but great work. Rambus. This has been one that's been interesting. This technology came out a long time ago. Hyped up. Server RAM. There's the upside potential. XLK. There we go. Back down to the breakout 270 area. I lost my internet for a second, I guess. Cool. Hopefully I'm back. Guess the internet took a pause for a second. First pullback. Right there. BST. Potential pullback to the roadmap line. Crawl. CRWD with 2x leverage. Might pop out. TER. Still on the downtrend of highs till we can break through. Can we get through? Again, that lead to a big potential upside here.